Thank you all for joining us today for this live webinar. I am Pushpa from Zoho Books team. As we approach the year end, like financial year, it's important to ensure your accounts are accurate and complete. Closing your books properly helps you avoid errors, stay compliant with tax regulation, and prepare for the new financial year with confidence. So in this webinar, we will guide you through the key steps to efficiently closing your books, whether you are a business owner, accountant, or finance professional. The session will help you understand best practices for finalizing your financial, like generating important reports and ensuring compliance with the tax regulations. So by the end of this session, you will have a clear understanding of how to close your books with confidence and set up your business for a successful year ahead. So without further delay, so we have Priya with us for this webinar. So over to you, Priya.
Thank you, Pushpa. Hello, everyone, and thank you so much for joining the session. So, I'm Priya from the Zoho Books team, and in today's session, I will walk you through the tips and tricks for a seamless financial year in management. So, this is the busiest time for any business, correct? As we approach the close of the financial year, it is necessary to ensure a structured and error-free closing process. Proper year-end financial management will help maintain compliance, streamline operations, and set a strong foundation for the next financial year. So, what do you have to expect from this session, or what is the agenda for the day? Let me quickly run you through. So, in this session, we will take you through a step-by-step approach to closing the financial year. We will cover the tasks to be done in essential areas such as your accounts receivable, accounts payable, reviewing transactions, reconciling your bank accounts, and inventory re-evaluation. Not only that, we will also touch upon important compliance measures including your GST filing, e-invoicing, and currency adjustment, ensuring that your financial records are accurate and up to date. So, this year end closing is not just about wrapping things up, it is also about preparing for a smooth start to a new fiscal year. So, we'll discuss a few tips which will help your business start on the right foot. So, what are the tasks to be done for a financial year beginning also? So, without any further delay, let me quickly dive into the session. So, this is how your Zoho Books UI looks like. And for any business, the key transactions are your sales and purchases. So first, let's understand what are the tasks to be taken care in your sales module. For any businesses, we create invoices for your customers. That is the main source of income which we receive. So there might be chances where you must have created the transaction, but you must have not yet sent it to your customer. So these might ideally be remaining as draft transactions. To oversee such transactions, you can just click on the filter here. We have the draft default filter, using which you can check all the transactions which you have created but you're yet to send it to the customer. So these transactions might have gone through an internal approval, or you might have holded it for certain internal reasons, but you must have missed it to send it to your customers. So these transactions can be reviewed and you can send it across to your customers or carry it forward to the next financial year. You can also use the advanced search option to filter out the transactions specific to the previous fiscal year. So you can enter the date range and the status required and hit search. So this will show you accurately the transactions which are drafts for the previous financial year alone. So these transactions can be reviewed and it can either be sent to your customers or carried forward to the next financial year. Not just your invoices, you might have even created your sales orders, but you might have missed to invoice them. So for example, I have received a sales order from a customer and which is also confirmed, but I must have missed it from sending it to the customers. So you can just invoice it. You can go to the confirmed sales order and you can either create an instant invoice or you can follow the shipment process, the packages and the invoices. The other transaction which you might miss is your time tracking module, wherein you must have missed your billable projects. So for example, we create projects on different billing methods like fixed cost, hourly rate per project, staff hours and task hours. So let's assume that I have logged in timesheets for various projects, but I have not yet invoiced it to the customers. So in that case, I can invoice them as well. So for example, if you check here, this particular time block has been approved internally also, but it is unbilled yet. So you can select this and you can send it across to your customer and get it paid. Next up, we have our recurring transactions. So recurring profiles are created wherein the transaction occurs again and again over a specific period. For example, your rent. So you might have been receiving rent from your tenants. So which will recur on every month, correct? So instead of creating the same invoice every month, I will create one recurring profile. Let's assume that the agreement, the lease has been closed and now you will not be receiving any further rent from the particular client. In that case, you can choose to stop the cycle. Or if there has been a revisal, you can clone it and you can enter the required values under the rent. For example, now if the rent value has been increased, I can simply clone it and I can create a new recurring profile, so which will be recurring on the required frequency. So now that we have reviewed all the transactions, next we need to check what are the invoices which are pending with the customers. Now I have created all the transactions and I've sent it across to the customers, but there might be certain transactions which are missed, right? The customer must have missed paying the transaction. For example, let's see this transaction. It is overdue by 6 days and the customer has not yet done the payment. So you can send a reminder to a customer through email or WhatsApp so that you can remind the customer that this invoice is pending and you can get the amount paid for the particular invoice. Or if the customer has already done any advance payment and you have missed to apply it, you can also get it checked. So in order to view your advances received from your clients and which is pending, you can refer the report Customer Balance Summary under Receivables. So once you go to this report, the invoiced amount, amount received and closing balance will be available. The unused advance payment, credit note balance and journal credits have been added by navigating to customized report columns. So here you have a lot of options available which you can add to this report and find the required details. So in this case, I would like to view all the unused advance payment, the credit note balance and the journal credits which are available. So once I run the report, I will get a fair idea of what are the unused advance payments or credit note, what are the credits basically available to this particular client which I might have missed to apply. So for example, if you take this client Abraham, the invoiced amount is close to 2,81,000, whereas the amount received is available, but there is a lot of unused advance payment and credit notes. So I'll have to apply these before sending out the reminders to the customers. So once all the invoices payments have been collected, now let's assume that certain invoices are pending for longer duration or certain invoices that money is not going to come through or you have stopped the business with a particular client. In those cases, you need to write off. First, to figure out the long pending invoices, you can again go to the reports module and refer our AR aging details report. So it's available under receivables again. So we have the AR aging details report. So you can run the report as on the 31st March and you can understand which invoices are pending for higher dates. For example, let us take this invoice which is pending for almost 220 days. So this invoice is pending for almost 200 days now and I've stopped business with this particular client. So this invoice value is never going to come through. So what do I do in this case? Now you can write off this invoice. So against record payment, you will find a small drop down. Click on it and hit write off. You can enter the reason and click on write off. So this invoice will be automatically tracked as a bad debt. So now we have seen what are the steps to be followed or what are the tasks to be reviewed in your sales module. Now let's quickly check your purchases module. So purchases module, we tend to create our expenses and bills, correct? So there might be a fair chance where we must have missed to create any of your bills or expenses. We must have received the bill or an expense PDF from our vendor, but we must have missed to create them. You might have simply stored them as documents. So you can go to the documents module and review if any of these are yet to be added to the transactions. So if any bill is pending, you can click on add to and you can create a new bill directly from here, or you can go to bills and expenses and create the required transactions. Just like how we settled up with our customer advances and credits, we have credits and advances for vendors as well. So let's assume that I have made some advance payments to a vendor, but I've missed to update it in my bills. So rather than making the bill payment directly, first we need to settle off the advances and the credits available. So just like how we check the customer balance summary report for our customers, for vendors, we have the vendor balance summary report as well. So this will be available under payables. So go to vendor balance summary. Again here you can add the unused advance payment available credit columns from the customized report column section. So this will give us an idea of how much credits we have with the particular vendor, and we can apply it to the invoices, apply it to your purchase transactions. So we have done all the vendor bill payments, or we have applied credits and closed it. Now let's assume that I have purchased something from a vendor, but the business has stopped, or the vendor, we are not going to make the payment to the vendor. In that case, you will have to write off the particular bill. So here I have made some purchase from this vendor, but moving forward, I will not be making any purchases from the vendor as the business is closed. So in that case, I need to write off the bills. So to write off the bills, we'll have to create vendor credits to close them. So you can go to vendor credits module and you can create a vendor credit directly from here. Select the required vendor. You can either select the bill number or the bill type, and you can enter the required description, select the required account and enter the values. Once this is done, you can directly apply it to bills to write it off. Once the credit is applied, this bill has been written off. So now that we understood about the steps to be done in your sales and purchases, next let's move on to items. So items are basically the products which you sell or purchase, correct? So you might be having inventory items created, you might track stock for the items. So in that case, let's assume that you have a certain stock on your hand, but there might be a re-evaluation based on some reason. So there might be some lost stock, or the goods might have been damaged, or there can be a value re-evaluation which you'll have to take through. So to understand what stock you currently have on hand and what re-evaluations are to be done, we can always refer the inventory valuation summary report. So just go to the reports module. We have a number of reports under the inventory head, and for this purpose we can check the inventory valuation summary report. So this report will give us an idea of what stock currently we hold on hand and what is the inventory asset value of the stock. So for example, let's assume about this particular stock, Apple iPhone 14. I currently have 54 items on stock, but the actual item which I have is just 50 and 4 have been damaged. So in that case, what has to be done? You can pass an inventory adjustment. Just go to items module and inventory adjustments. Click on new. So this is a quantity adjustment. You can enter the reason. The new quantity which is available on hand. I'm just creating it for one branch. So the new quantity which I currently have is 46 on the particular branch. I can convert it to adjusted. So now if I check the inventory report for the particular item, the stocks must have been written off, and again the inventory values will be re-evaluated. So this is currently under progress. So Once this is re-evaluated, the inventory value will get updated in the inventory aging summary report. Not just quantity, you can also pass value adjustment. So let's assume that you have the stock quantity remains the same, but whereas the value of the item has changed. For example, the current value you hold is around 10 lakh, but the actual value has come down to 9 lakh 50,000. So in this case, I can pass a value adjustment wherein the stock will remain the same, but just the asset value of the stock will get updated. So once this is done, the inventory value will get adjusted accordingly. So there might be certain items in your inventory which you might not use any further because the item must have been stopped from the market, or for any other reasons you have stopped the sale and purchase of that item. So in order to prevent any future transactions with this item, you can mark them as inactive. So marking them as inactive will prevent you from creating the future transactions, and the existing transactions will just remain as such. So next module which we are going to review is the most important module, which is nothing but the accountant module. So in accountant module, we can just review what are the different accounts which we have, and in case if we are not going to use any of the account, you can mark them as inactive. Now let us assume this loan lend account, I've created it for some purpose, but right now this account I've cleared off the debts and I'll have to mark it as inactive because I'll not be using this account any further. So you can simply click on this and mark it as inactive. And also in certain cases during the year end review, you might understand that you might have created the transactions in the wrong account. For example, I have an expense which has to be tracked in a different account, but instead I have tracked it in a wrong account. Now we'll have to update all the transactions. But manually updating each of the transaction is a very hefty and difficult process, correct? So in order to update all the transactions in bulk, we have the option called bulk update. So you can go to bulk update. So in this case, I'll have to, let's assume that I'm paying some commission to some of my salesperson for which I create expenses. So instead of making the payment to one salesperson, I've made the payment to a different salesperson. But the entries here are updated incorrectly. For example, the expenses which are recorded in this commission account is incorrect, whereas I'll have to actually update them to another account. So I can enter the incorrect account wherein I have made the payment, select all the transactions which I have done and click on update. Now I can select the correct account wherein I have done the payment and click replace. Once this is done, the updation will be done in the backend and the transactions will be updated with the new account. So this is an irreversible process. So make sure that you always sit with your accountant before you bulk update any of your accounts. Another important task which you'll have to do in the financial year end is your currency adjustment. So what is a currency adjustment and why you will have to do it? So currency adjustment is basically, let's assume that you have your base currency of the organization is INR, but you have transactions in other currencies like say USD or dirhams, etc. So in that case, the exchange rates keep fluctuating every day, correct? So let's assume that you have created transactions on 1st of March or 2nd of March. Each day the value will keep changing because of the exchange rate fluctuation. Now you must have created transactions over a period of time, but there could be chances wherein you must have not yet received the payment and you're yet to receive it. So in the end of the financial year, if you would like to reinstate your currency to a single exchange rate value, you can very well pass a currency adjustment. So just navigate to accountant, currency adjustments, click on make an adjustment, enter the currency. In my case, I'm just entering USD. You can enter the date of adjustment as 31st March. The exchange rate will get populated. You can either use this or enter the exchange rate which you require. You can enter the notes. click continue. Once you click continue, all the transactions under your sales and purchase, that is your accounts receivables, your payables, and also the bank accounts with the particular currency will get listed. You can select which transactions you would like to re-evaluate and you can click on make an adjustment. So this page will give you an idea of what is the balance in USD, what is the current balance and what is the current revalued balance, and you can understand if you will be getting an exchange gain or exchange loss. So once you click on make an adjustment, this adjustment will be done and all the exchange gain or loss will be tracked in the exchange gain or loss account under your chart of accounts. So now that we have reviewed all the transactions, the next important module which we'll have to go through is the banking module. So you might add your bank accounts, match and categorize transactions, and finally reconcile them to understand if your bank transactions and transactions in your book of accounts are in tandem. So let's take an example of this bank. So I've created this bank and I'm managing my transactions here, but I have certain uncategorized transactions, which means the bank statement has been imported, but this has not been categorized or matched with any entries in the books of accounts. So these uncategorized transactions will not have any impact in the reports of Zoho Books. So first and foremost, you need to match and categorize all the entries which are available. Once you have matched and categorized, all these transactions will be available in the all transaction module. Now you can either manually categorize or match them, or you can create transaction rules. Now let's assume that I have certain income which can be deducted from the payee name or the amount. In that case, I can create a transaction rule. So what this transaction rule will do is every time there comes an entry with any of these criteria, it will automatically categorize or show it as a the recognized transaction. So you can set up transaction rules if you have any recurring transactions which can be identified with the payee, the amount, or the description or the reference number. With any of these four criteria, if you will be able to identify the transaction, yes, you can very well create a transaction rule and you can record it as your customer advance, the interest income, or you can transfer it to the other accounts. So you can choose to either show them as recognized transactions or you can categorize them automatically. So once all the transactions are categorized and matched, they will come under this all transactions tab. So once you've matched, categorized and done everything, the next important step is to reconcile the account. So why do you have to reconcile the account? Once you do the reconciliation, you will understand that your bank balance and Zoho Books balance are matching with each other and all the transactions in the corresponding period will be logged. So to proceed with reconciliation, hit on the gear icon and click on reconcile account. So you need to set a date range. You need to add the transactions in. So click on reconcile now. You can enter the date range. Just reconciling it for the entire financial year and entering the balances. So once I click on start reconciliation, all the transactions will be available. You can select the required transactions. If the closing balance and the cleared amount matches with each other, then the difference will be 0, which means that your bank balance and the Zoho Books balance are matching with each other. So you can hit on reconcile and the transactions will be reconciled. Now these reconcile transactions will have a green tick next to them. So these reconcile transactions cannot be altered or edited. You will have to delete or undo the reconciliation to make any changes in these reconcile transactions. So now that we have done all the required steps or tasks to be done in the sales, purchases, accountant, items and banking module, the next step is to log all the transactions. In Zoho Books, we have an option to log all of your transactions. So you can go to accountant and transaction logging. So here you will have an option to log your individual modules such as your sales, purchases, banking and accountant, or you can log all the transactions at once. So for example, if you have completed viewing all your reviewing your sales module and purchase module, you can just choose to log only them. Or if you have completed reviewing all of the modules which we discussed earlier, you can choose to log all the transactions at once. So you can switch to all transactions and you can hit lock. So regarding this log date, whatever date you enter here, the transactions prior to that date will be logged. So for example, now if I want to log the transactions until 31st of April 2025, then the log date has to be 1st of April. So now in this case, since it is not 1st of April yet, I'm just selecting the log date as 24, which will log the transactions till 23rd. You can enter the reason and you can lock it. So now the log date was 24. So as you can see, the transactions created before 24/3/2025 have been locked. So if you would like to log the entire fiscal year, you will have to give the next financial year end date starting, that is 1st of April 2025. So these are the steps to be done. And also next up we have some other few tips. So for example, you can also check if you have filed all the GST returns. So Zoho, being a GSP, allows you to file the GST returns from Zoho Books itself. So you can check and review if you have done all your GST filings. So here in this case, it is done only till December 2024 is pending. So from December 2024, you can mark the returns as filed and you can proceed with the upcoming months. Also, you can check if your annual return is filed. So GSTR 9 is the annual return which we will file on 31st of December on every year. So you can also check and review if the GSTR 9 for the previous fiscal year is filed or not. So we have something called e-invoicing, which is just an additional validation of the invoices by a government portal. So we have a transaction limit. Currently, e-invoicing is applicable for businesses with a turnover of 5 crores and above. So let's assume that until now you have not under the purview of e-invoicing, but this year you have crossed the transaction limit needed for e-invoicing, and from this year you will have to use e-invoicing. So Zoho Books, being a GSP, offers you seamless integration with IRP portal as well. So you will have to enable the e-invoicing in Zoho Books. Go to settings, e-invoicing, and you can click on enable. So you need to enter the revenue and you can enter the start date. So the transactions which are created after the start date will be applicable for e-invoicing. You need to make you need to add Zoho Books as your API as your GSP in the e-invoicing portal. Once done, you will be able to generate e-invoices from Zoho Books directly. So now that we have done all the steps to close the financial year, the next step is to schedule all these reports. So Zoho Books has around 75 plus reports offering insights on various heads like your business overview, your sales, purchases, inventory, etc. So now that we have reviewed all this, now we will have to send these reports to the review of our management as well, right? To the stakeholders or the respective teams. So instead of you downloading and sending it across to them, you can simply schedule the report. Now let's assume that you will have to schedule the business overview reports to your stakeholders. So just go to the required report and click on schedule report. You can enter this frequency, the start time, start date, and the email recipients. So whichever user is added in Zoho Books under settings and users will be listed here. And if they're not a part of this organization, you can add them as additional recipients. And you can attach the report as Excel as a PDF. Once this report is scheduled, it will reach the respective mailboxes on the set frequency. So not just the business overview reports, you can schedule a lot of other reports. For example, if your warehouse team would like to review the inventory, yes, you can schedule the inventory reports. Or if your AR team would like to view what are the invoices which are pending from your customers, you can schedule the AR aging details report. So there are a lot of reports which can be scheduled to various departments as per your requirement. So now that we have done all of the required steps to close a financial year, now what has to be done to start a financial year? Before we move on into starting a new financial year, I would like to tell you something about Zoho Books, how seamless it will help you manage your year end. So in Zoho Books, you need not manually close your books of accounts and enter the balances for the next year. So the closing of books will be taken care by the system, and all the closing balances as on 31st March will be carried forward as opening balances on 1st of April. So you need not manually make any changes in your books of accounts. Whatever transactions you have created, based on that the closing balances will be populated and they will be carried forward as opening balances on the new fiscal year. So now let us understand what are the few steps to be followed on 1st of April. So now we have seen the tasks which are to be done on 31st of March. Now we will see what are the tasks to be done on 1st of April. First and foremost, we will have to update the transaction number series. So you can just go to settings. Under customization, you will find transaction number series. So transaction number series is nothing but whenever you create any transaction, there is a numbering of the series which comes in, numbering of the transaction which comes in, correct? So if you would like to start the financial year end transaction series with 1, you can use this option. So here we have also given an option to insert the placeholder based on your fiscal year start or the transaction date or month. So whenever you enter this, this will be a one-time process which you'll have to carry on, and every year the series will get reset automatically based on the placeholder chosen. This feature is available in the Elite and Ultimate plan of Zoho Books. If you are in standard, professional or a premium plan, you can come here and make the changes manually. So you can enter the prefix and you can start renumbering the series. And you can give it as yearly and the series will start renumbering yearly. You can also prevent duplicate transaction numbers if you have enabled branches. You can choose to do it for for just that fiscal year or for all fiscal years. Next important step is to transfer your profit. Now, if in the end of the financial year, we must have either got a profit or loss, correct? So this profit or loss will be tracked in your retained earnings account. So in Zoho Books, we have an account called retained earnings. It is the default account in which the profit or loss will be automatically calculated. Now, if you would like to share the profits with the owners or with the stakeholders, you can create a manual journal to transfer the profit from equity account. So you can create a journal. The journal date has to be 1/4. Enter the required account. So it will be retained earnings and the required owners accounts. So this will transfer the profit from the retained earnings to the required owners equity account. So the next important point here is to configure the budgets. So every business might have a budget based on which it has to function, correct? So you can create a budget on start of the fiscal year to ensure that you have proper financial flow throughout the year. So I can create a fiscal year budget for enter the fiscal year. The budget period can be monthly, quarterly, or a half yearly or yearly budget. You can select the required income accounts, the expense accounts, and you can create the budget. You can also choose to include your asset, liability, and equity accounts as well. So now that I have added all the accounts, now you will have to you can fill the values. You can choose to pre-fill it from the previous year actuals, or you can autofill them using certain conditions. So using autofill, we have certain criteria which can be applied. So you can choose to apply a fixed amount for each period, or you can have an adjustment amount. For example, I have applied 1000 rupees on first period, and let's say it keeps increasing on rate of 100 per month, then yes. Or you can add it to each period's existing amount. Or you can use an adjustment percentage. Instead of entering an amount, you can choose the adjustment percentage. So on this value, the percentage will get applied for each period. So once you have created the budget and added values, your budgeted values for the required year, you can save them. You can also choose to export the budgets or pre-fill the budget using the import option. So I have created a budget. At any point in time of the fiscal year, you can always view the budget versus actuals to understand if your finances are regulated within the budget or not. So say for instance, if it is an over budget, it will be shown as negative and in red, and if it is an under budget, it will be shown in positive. So this brings us to the end of the session. As we wrap up today's webinar, let's take a moment to reflect on the key takeaways of the session. So, a well structured year end closing process is essential for maintaining the financial accuracy. So, we have explored the importance of managing your receivables and payables, reconciling your bank accounts, verifying the reports, re evaluating your inventory, adjusting your currencies, and locking the transactions to avoid discrepancies. Also, looking ahead, preparing for the new fiscal year is just as important as closing the previous one. So, updating the transaction number series, distributing your profits, and configuring budgets will help create a strong financial framework for the months to come. By following these best practices, you can avoid last minute financial surprises, improve your decision making, and ensure a smooth transition into the next financial cycle. Thank you so much for your patience. And now, if you have any questions, please feel free to post them in the questions tab and we will be taking them up shortly. How to use unused amount from client? You can check the reports, the customer balance summary report, to understand what advances or credits are available for the particular customer. So you can go to customer balance summary and you can check on the unused advance payment and the credit note balance. So you can apply this to the invoices. So for example, this unused advance payment is available. So I can navigate to the payment and I can choose to apply it to transactions. Next up, we have another question. Explain about the currency adjustment. So currency adjustments can be created under the accountant module. So why do we have to create currency adjustment is, let's assume that your base currency of the organization is Indian rupee and you have transactions in other currencies like USD, CAD, etc. Now the exchange rate will keep changing every day. So even if you have created one or two transactions over the period of a year, the exchange rate will keep changing based on which the INR value of the invoice will be updated. Now, at the end of the year, if you wish to reinstate your currency value, that is, have a common exchange rate, you can make an adjustment. So, click on Make an Adjustment, enter the currency. So, if you have any transactions created which are pending, that is, which you are yet to receive from your customers or which you are yet to pay to your vendors, it will be listed. And this will give you the revalued balance also based on the exchange rate you have chosen. Click on Select and make an adjustment. So this will update the exchange rate in the transaction by passing a base currency adjustment. We have another question. How can we make amount in bank and amount in Zoho Books equal from start of the financial year? So you cannot enter the opening balance every time on the financial year. All your previous year balances will be carried forward as opening balances. So in your bank also they will be carried forward. So let's assume that in banking module you have some differences between the amount in your bank and amount in Zoho Books. They might be due to the uncategorized transactions. You must have missed adding them into your books of accounts. So the reason could be that you might have not added certain transactions into your books of accounts. So you can always refer the all transactions and check on the running balance. So you can take a different time zone. For example, if the running balance start mismatching from middle of the financial year, you can start checking the transactions from there, so that you will be able to identify which transactions are missed and you can add it into your books of accounts. So we have another question: how to update the opening balance in Zoho if I'm using in first year? So yes, opening balances can be updated in Zoho Books. So to update it, go to settings. Under organization, you will find opening balances. So here you can enter your migration date and all the values related to the particular account. So this is just a one time process. You need not update it every year. As we discussed earlier, the fiscal year end closing and reopening of books will be directly done by the system. So you need not update these balances every time. This has to be done only once when you migrate into Zoho Books newly. So next up we have another question. In new financial year, the opening balance will be auto transferred. If any change is there, we can change it, right? So I would like to clarify a point here. So in Zoho Books, the closing and reopening of books will be done automatically. So your previous financial year closing balance will be carried forward as opening balance, as you rightly said. But if there are any changes in that, then you will have to review the previous year transactions only. So because the balances are populated as per the transactions you have entered, you will not be able to just change the value as such, but you will have to review the transactions and make changes in the transactions so that it will be reflected in your closing balances, which will be carried forward as opening balances. So next we have another question on currency adjustment. So what I would like to clarify here is, whenever you're creating a transaction, yes, the exchange rate will be updated, and when you're recording the payment, yeah, the exchange rate might be different based on the date you're recording, and then your exchange gain or loss account will be updated automatically, right, based on the difference between the exchange rates. This currency adjustment is not related to it. Currency adjustment will be passed whenever the payment is yet to be done or payment is yet to be received. That is for your due transactions. Now let's assume that you have created some transactions in the financial year 24-25, and as on 1st of April 2025 you have not yet received the payment, but you would like to reinstate the exchange rate. In that case, you can pass a currency adjustment. Thank you so much. We appreciate your patience. So we hope we have answered most of your questions. In case if your question was unanswered, we will reach out to you from our support email address. And if you have any further product related queries, please feel free to reach us out on support.india@zohobooks.com, or you can also reach us on a toll free number. We are providing support over multiple languages now. We have support in English, Hindi, Tamil, Telugu, Malayalam, Kannada, Marathi, Gujarati, and Bengali. So you can reach out to the required number and get assisted. So we appreciate your participation today and hope this session has provided you with insights to streamline year-end closing process and start with a new financial year. So thank you so much for participating. Looking forward to meet you all in another session. Have a great day.